You're listening to Inside Real Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
Directly from those who know it most. And today we have one of those people on the show. Hello, everybody. This is Paul Apostolakis. We've got Salvatore Cusmano. We've got Brad Weisgerber. We are all shaved and ready to go, bud. Do I look better or what without the mustache, Sal?
Much better.
Much better, right?
Much
Back
better,
to normal. Yeah. No weird upper lip. Yeah.
Brad, do you comb your hair today?
It looks like he has a toupee on, doesn't it?
Oh, my God, dude. It's getting too long to not be able to comb it.
Get that Flowbee, bro.
The what?
The Flowbee, where you can shave your head and it sucks it up in the thing.
Yeah.
So, guys, first and foremost, everybody that listens to the show, we really appreciate your listenage. I don't know if that's a word. You guys are awesome. Please go to IREpodcast.com. Go to Facebook.com/IRE podcast or catch us on any podcast app. Please like, share, subscribe. It really helps us out. It allows us to bring you guys more and more high level, content. Today's probably like super high level content, guys. We've got Mr. Mat Ishbia coming up. I'm going to put him up here in a minute, but I wanted to preface by saying he's rich as fuck. So let's be really nice to him. Okay.
Is that how that works?
Yeah.
I don't think that's how it works.
Oh, okay. That's not how it works. We don't just get money for being nice to people that are rich. Okay. So Matt, get on the show, dude. Welcome to the show. Thank you for doing it again. You are the best.
No, thanks for having me, guys. I always love being here with you guys talking business. It's great.
Yeah. Since the last time we saw you, there's been a few changes, right? $12, $13 billion worth of changes for you. So you guys went public. And on the last show, Quicken had just gone public. We had you on. I was like, do you think you do it? And at that time, I don't even think it was like on your mind to do it. But like, you were like, yeah, if it makes sense, we'll do it. And this SPAC deal came up and you guys are going public. You're going to be going to the New York Stock Exchange pretty soon. We were talking about that. So talk to me about that process. How did that come about? How do you feel about that? Because, I mean, that is a big deal, right? Like for that to come in and all of a sudden you've got all this capital, right?
Yeah, no, I think it's really, but when we were on last show, I wasn't able to talk about it. We had been working on this probably since about May.
Oh, okay.
So well before Rocket or Quicken came out. And so it started in May and going through the process. What it really comes down to is when you're a non-bank lender to the size we're at, either, having access to capital and liquidity is the game. Yeah. And we've always been kind of, figuring it out, trying to make it happen together. But I've always invested all of our money in technology. Hopefully you guys and all of Mortgage Brokers America feel that and get that benefit. And now I'm able to invest in servicing as well and having a level playing field. I mean, my biggest competitors are Wells Fargo, Chase, Rocket. These are the three biggest mortgage companies in America besides us. And we're number 2 right now. And it's like they have access to the capital and liquidity. And now we're on the same playing field, so we can even do more. So that was the decision. It was like, it was just time to take it to the next level, and I had to make that decision, and we're excited about it.
That's amazing. Yeah. So you guys were able to obviously you guys got valued at a really high valuation. I mean, not that it was surprising because I know the company, but a lot of people out there might be looking at it like, how is a mortgage company worth that much money, right? When they did the valuation on you guys, why was it that you guys got such a high valuation for your company?
I don't know. All I do is run the business as effectively as possible. When they came out and said it's worth a $16.1 billion, some people said that sounds like a lot. To me, it sounds like a lot just in general because it's a big number. But in the reality, in the scheme of things, I mean, Rocket, who's not twice the size of us and doesn't make twice the profits as us, is worth $40 billion. So you argue both ways and see, so we think there's a lot of upside. I don't really focus on the valuation. I focus on, hey, we make a lot of money. We help our brokers succeed. We continue to help consumers across America. We take market share. The valuation will take care of itself, and that's really how we've run the business, and we'll continue to run it that way.
Yeah, it's really good news, man. And I'm happy for you guys, obviously, having the kind of valuation. And think about it. Over the last 10 years, you kind of built this whole thing, and it's worth that much money. So kudos to you, man. First and foremost, congratulations to you and the team and everybody for having some really cool stuff going on over there. I know you guys just had like a Christmas thing, right? Or not a holiday party, right?
Yeah. Well, we always, as you guys know, we used to do a big holiday event, and we always do a holiday event, but this year we couldn't do it in person. So we did a virtual thing, gave away a lot of cool stuff, take care of our team members. Once again, it's just we're going to keep running the company the same way that got us to where we're at and continue to take it to the next level. And whether it's a valuation, which, or it's an opportunity to grow, whether it's more capital in the business, only things are going to get better. We're only going to grow and succeed even more. And the holiday party is another example of it. We're going to keep doing right by everybody as we did.
Yeah, and you know what's interesting about that, Matt? It's like you've already done a lot for the industry with what you've had. Now I'm curious, like, what do you want to do now that you kind of are more flush, right? Like, what's on the table? You know what I mean? Like holographic closings? Like, I don't know. Like, what are you looking at?
Well, you guys know closing fast and efficiently is the game. Faster, easier, cheaper is what we always focus on here. How to make it faster, easier, cheaper for brokers and consumers. But the next thing that we're maybe now at the level playing field, which is why I think, where I would make an argument the valuation is low and some opportunities to grow substantially is there, is the fact that, we're going to educate consumers. You guys know, and most people that are in the know understand the best way to get a mortgage is through an independent mortgage broker, an advisor that can guide you. And the general public does not know that. That's why 80% go through the retail channels. Well, that's going to change. And when that changes, we're going to continue to grow because we're about 35% of the overall mortgage broker channel. And when more people go through this broker channel, more will go through UWM, and we're hiring them prepared and with our technology to be able to handle that. So I think there's a huge upside there is educating consumers and real estate agents so everyone knows the best, most efficient way to go through a mortgage process is through an independent mortgage company.
Yeah, no, it's interesting. Like you guys, I mean, it's weird because you guys are so far ahead technology-wise in the wholesale channel, in my opinion, just as far as usability, tools, so on and so forth for the brokers out there. So, you guys have made a really big push for people to start using your tools because you guys have built a lot of great tools and they might be underutilized, right? I know that you're trying to give incentives out there for using your tools because you believe in them, right? So talk to me about the user base. Do you feel that brokers aren't utilizing your tools at the highest level that they could be? Or do you feel like, I don't know, I guess, what was your thought process as far as that goes?
Yeah, so we have some loan officers and mortgage brokers that use every single thing we do on every single transaction, and we see them thrive and grow. And so it's like, why aren't some of these other people doing it? A great percentage of them do. And so what we've done is try to think about how do I get even further adoption? It's like a trick. Like I was a basketball player in high school and college, and it's like the basketball coach is like, you're going to go in the weight room and work out. And we're like, oh, I don't want to work out. I don't want to go. But when you go work out all the time, you get stronger and you're a much better basketball player. It's the same thing with our tools. Use the technology, use Brand 360, use Blink Plus, use One-Click AUS, use easeDocs, use the app, use all these things. And what happens is use Processor Assist. What happens is you get stronger and you just are a better basketball player. You're in our world, you just do more loans. And what we've seen is there's a major divide. People that use our tools have lower close loans faster, as in lower touches and lower faster submission to close, and get more referrals. So they're growing faster and more efficient. They're making more money. So it's like, I just got to get everyone to do it. And a great percentage do, but we want even more. We want it to be like 80, 90%, and we'll get there eventually.
Yeah. We've got some questions. Ramad says, when can we expect competitive rates for jumbo loans from UWM? Now, that is an interesting question because historically, Matt, because of the fact that, it's more of a private money lending situation. It's not like just so everybody knows, jumbo loans aren't backed by like Fannie, Freddie, FHA, just the normal like insurance conglomerates out there. So basically it's private money. So historically, mortgage brokers were a little bit at a disadvantage compared to the banks on that because the banks could offer whatever they want because they're holding the money. If they've got $1 million in assets, they just want them to have the mortgage for cheap. What are you seeing in that front? Are we going to compete in that, or is that something still that's going to be kind of tough?
So the reality is one of the things when we're looking at the right strategy for our business, right? Hey, do we go public? Do we buy a bank? Do we do both? Right? Do we do all these things? Owning a bank would give us that benefit of that we could portfolio the loans. To your point, you don't have to sell them to Fannie and Freddie. And right now, the private markets are not available where you can buy. It's not great yet.
Yeah.
But the reality is, first off, we don't even have jumbo on our rate sheet right now because we want to make sure if we have something, it's got to be good. And so it will come back in the first quarter. So I will roll the high balance nationwide program out, the jumbo bank buster program out, some of those things out there. But unfortunately, we're still relying a little bit on some of these large banks that we have to use on these loans. So it's the one odd thing in the broker world. Now, the nice part is broker worlds have access to, there are banks in the wholesale channel, Flagstar and other good banks that brokers like you guys have access to using. So you can have a competitive jumbo program, and UWM will have a competitive program out there to help our clients. It's because, obviously working with us, you get a great rate, but you also get it faster and easier, simple process. And so we'll have it out in the first quarter. We'll be ready to roll. We just rolled out FHA Conquest to kind of round out our programs. We modified some overlays, and then the jumbo stuff's coming in Q1, and we'll be flying high and making things happen Q1, Q2, and beyond. Yeah.
Speaking of Conquest, Sal, you've seen a lot of success. Sal writes a lot of loans. Obviously, he's our top loan. I mean, he closed like $6.5 million the other month. And Sal, you did a lot of Conquest business. And Sal, do you want to talk to Matt about the Conquest program and if that's going to continue? I know that we were talking about that the other day.
Yeah, I mean, I think from as soon as it rolled out, Conquest has been huge for brokers to win, right? Win new business, do a lot of things that the program was designed for. And it does seem like the buckets are leveling, like the original Elite and the Conquest. Do you plan to probably just eventually just make good conventional pricing and kind of phase Conquest out, if that makes sense?
Yeah, we brought them close together. So the concept there was, it wasn't ever supposed to be 150 basis point difference, but that's how we started out. Now there's like a 30 basis point difference. So the concept there is Conquest is not going anywhere. Conquest will be here for the long term. The whole concept is you want to close a loan faster and efficiently, and you want to close it on a shorter term lock period. We have a Conquest program. You want to go steal a loan from a retail channel. You want to go grow. And then our regular product should be very competitive and normalized too. And so those will merge closer. But I always want to give that opportunity for someone like you, Sal, to go out there and win a loan. So on a purchase, that's a Conquest. Bring them into the broker channel. Bring them over to Omega, right? Or on a rate and term that you're taking from another lender, same type of concept. So we always want to give that little extra pricing, that little shorter term lock. Now, you see how fast our turn time, so all loans are closing that fast anyways right now, but it's not designed for investment properties with 3 units, right? It's designed for a certain type of borrower that wants to go in and out fast, easy, and cheap, low rates, and that's the concept.
Matt, over the years, what's been interesting about your model, and I think you've done a really good job of this, is going like pricing the deals that you wanted well, right? Like the ones that you felt like deserve better pricing, you'd give them better pricing. It wasn't like you had one like conventional mortgage, right? You were like, we're going to have, if they have these criteria, we're going to give them better pricing because it's going to sell, like it'll be an easier product, right? So talk to me about the mentality of that. Is that something that you want to continue doing? Because through COVID, I remember talking to you before and pricing was kind of off and you're like, I got to figure it out, Paul. Don't worry about it. I got to figure it out. And you came out with a Conquest program shortly thereafter. And it was like, okay, that makes sense. You priced and you went after the business that you wanted at that time. That was the safest that would sell good on the secondary market. Is that something that you're going to continue to do now? Or is that like you feel like you've got your suite?
Yeah, no, the strategy is always the same, right? There's a cost to original lending. All loans are not the same, right? And so loans that, and you see a lot of our competitors right now price self-employed much worse than W-2 because they're more complex to underwrite, right?
Sure.
We have not done that. And I don't plan on doing that anytime soon right now. But the same thing with FHA was more delinquencies than VA and conventional. So I came out with conventional Conquest and VA Conquest, not FHA. Now we've come that out. We also have adjustments for lower FICO scores. Like you have to bring the loans in that are going to pay. They're going to make your clients look good and are going to be efficient through your process. If you bring in a bunch of, certain type of loans and it takes longer to underwrite, and all of a sudden the borrower that's the exact one you want is taking 5 days to underwrite that loan, like you're going to lose that client. You as the broker are going to lose that client. And so we have to make sure we build our machine, our team here to be able to handle the volume of the loans that we want, close fast, easy, and cheap. If you're not doing it faster, easier, and cheaper, you're not going to be doing the loans. And so that's how we think about it. If I can't be great at it, we're not going to do it. I don't try to be everything to everyone. We're not going to ever do non-QM loans. I'm not going to do, people ask me all the time, hey, you're the number 2 overall lender. What's it going to take to be the number 1? Why don't you just lower your FICO score bucket? I said, listen, I'm not going to do the loans that Quicken and Rocket do. They want to do low credit scores. They want to do loans that are, that's just not, I'm not going to a 590 credit score. I'm not doing manual underwrites in those examples. That's not for who we are. I know what we're great at. We're going to always stay true to who we are with the right type of quality, the great experience. Every loan that closes at UWM has to have a wow, that was an easy mortgage experience. If they don't feel that at the end, then I failed you as a broker and I failed the consumers as well.
That's totally interesting that you said that because that segues really well into my next question. So forbearance, right? Initially, forbearance was like a big X factor. Nobody knew how many loans are going to go into forbearance. Right now, the numbers sit at about 5.25%. total in forbearance. 3.5% of that's Fannie and Freddie, while 9.2 is FHA, which is kind of speaks to what you're saying, where the lower FHA would allow a lot of the lower credit score stuff to go through. We're kind of seeing high in forbearance on that. What are you guys seeing at UWM as far as forbearance? And is this a non-factor right now as far as, last time you told me you were prepared for 10, 20% for.
Yeah. So you watch it all the time, but you know what? The forbearance is the scoreboard after the loans you already did, right?
Yeah.
So like we already do all the right loans. Ours is less than half of the industry right there. You said 5 point something, 5.5. We're less than half. We are less than half that at our company, to give you an idea of how much better our quality is. And so back when COVID happened, you didn't know if based on all the things, it could go 10, 20, 30%. And then you start saying how much, and then if you understand, we have to make the payment for the borrowers that don't pay it. And so, and there's no relief on that. And so that was a concern. And that's where some of the things you have to understand. And that was one of the other benefits of going public. Now we have access to capital, access to liquidity. Our liquidity is, literally 10x what it was, just 8 months ago. And so the difference is like, it doesn't affect us. It's not a relevant thing, but it's once again, that's the result of the work we put into doing the right loans. And other people can have high forbearance and don't worry about it and delinquencies. And we want to do right because it's not only about the company and the data, it's about doing right by consumers. We want to make sure we're doing loans for consumers that can afford the house or can refinance and take good care of consumers. You do right by consumers, you do right by brokers, you're going to grow your business.
It's interesting because there's an argument on the other side, Matt, and I agree with you. I grew up in your system, and I feel like doing the right business is always really, really important. Sal and Brad also agree with this, but we talk about all the time, Sal and Brad. There is money that we leave on the table when we do that. But it could be at hurting our reputation overall, right? At the long-term consequences of that short-term monetary income coming in, to us isn't worth it. But a lot of people look at us and they're like, "You guys are idiots. You know how much more business you could be doing if you did X?" So, Brad and Sal, do you guys think like Matt does, or do you guys think that like we're leaving money on the table and we should take more?
Definitely like Matt does. The amount of time and effort it takes to do a lot of those deals, because they're more complex, there are stricter guidelines, you're running around in circles. The amount of time and energy you put into one of those deals, you could close 3 other deals. You could go get 3 other deals, right? So I don't think it's worth doing a lot of those deals. Plus, your reputation's on the line, because you're setting yourself up for failure. You're never going to have a great experience with more often than not, you're not gonna have a great experience.
And Matt, just so you know, I don't think these people can get mortgages some places, and sometimes we'll direct them to the places they can go because we want them served. Ultimately, though, we just don't think it's a good experience, and ultimately, it's just we have our own kind of standards, right? Like we don't want to take that 620 credit that might default.
Well, I think you just have to know who you want to be, right, and who you want to help, and make sure that if you aren't the one to necessarily help them, hey, give so-and-so a call. They'll take care of you, right?
Right. And I think that's exactly right. You want to be able to help as many consumers. Every consumer, I want to direct them. But Omega's brand, sales brand, Brad, Paul, has to be that you're great. And you know what? If it doesn't matter if online, if you look at social media or you look at Google reviews, nobody says like they blast you negatively or positively. No one says, well, here's what happened on my deal. I didn't make a mortgage payment for 7 months and then Omega couldn't do it for me. Like they don't post that. Omega told me they could do it and they didn't, right? And so you have to know what you can do and be always under promise, over deliver, always drive people, take care of consumers. But know your brand, know who you are. Not everyone's the same. Like you can't do every single loan because you physically can't do it. And then you're going to hurt some consumers to help some maybe. And you got to just know who you are.
Yeah. It's interesting. And people look at us and they think we're weirdos for doing it, but it's the right way to do it, dude. It really is. You know what I mean? So wait, let John Hill, Jesus, I don't want to show. Let Jesus Christ. John Hill says, what are the 3 issues you are concerned about coming into 2021 that could impact the industry as a whole and UWM? It's a very negative question, but go ahead, Matt. What do you see as 3 possible issues in 2021? By the way, you did mention that Q3 would be our best quarter of all time. You were right. So go ahead and pontificate about 2021, my dude.
Yeah, I think we talked about that. There's a great 6 to 18 months in mortgage. It was some of maybe the best 6 to 18 months in mortgage history. I think we're about 5 months into it. I think all of 2021 might be the best year of all time. And so, what are issues that you're concerned about? I mean, you're always concerned about everything. You got to understand the overall economy. And so understanding how COVID and how this is all going to shake out is definitely something that the whole economy and obviously mortgage people and UWM all have to pay close attention to. Am I concerned about it? No, I think that if you're in the weeds of your business, you're going to be able to make the right decisions at the right times to continue to win. There's always winners and opportunity out there. And there's people that like to dwell on all the things that can happen bad. There's a huge opportunity. 2021 is going to be a great year. Do I think about what other impacts could have a negative? Like I feel really good. I mean, the mortgage brokers are going to grow. The new president, the president-elect Biden, if that all works out the way it looks like it's going to, that's going to actually help mortgage brokers and consumers. So I actually feel positive about that one. It might hurt some big mega retail lenders or banks because of some of the regulation. But in general, the way I look at it is I think that there's all upside in 2021 as long as we can manage through the pandemic and the world gets back to normal where you can go out to a dinner and a bar and then those people can make money and still pay their mortgages. At the same time, go and buy a house or spend money in the economy. It just helps really everything. And so I think the pandemic is the biggest concern or risk around 2021. Is the vaccine going to work by January, February, or are we going to be talking April or May? Where are we at? And that's how it comes from there.
Yeah. Speaking of which, a lot of the growth in the housing market, in my opinion, has been because of COVID, because people were living in their homes and they want to find the right properties. Now that potentially a vaccine is coming out, does that reverse the work from home thing that people are able to go live anywhere and move, or does that kind of stop that in its tracks and everybody's gonna be come back to the office, right? I mean, in your opinion, does the COVID, the vaccine help or hurt our business?
Well, I think it helps. I mean, it helps everyone. It makes sure everyone's healthy and happy. It's all good, right? And so now from the work from home concept, I think what this showed is that people can be productive working from home. There are opportunities. So I think the world has changed in that respect, that people know that there is jobs that you can do from home or you can do your job from home. And certain companies will have that as an option potentially in the future. However, in our perspective, and I think a great majority of people will be back to work. And I think people want to be back to work. I think people definitely want to be back to work if their kids are at home because they want to, kids got to get to school and all these things. But I think people are going back to work like you used to know it, maybe a little slighter. So if it used to be, 90% of people were working out of an office, maybe it becomes 80, but it's not going to be 10 if you think of it that way.
Yeah. And I think it's really hard. Oh, go ahead.
What's UWM's plan to get back to work? Are you guys going to bring everyone back to the office? Because I know right now you still have a large chunk of your company working remotely. Do you guys have a plan? Are you waiting for the vaccine? Are you going to make your employees get the vaccine before they come back? Or what are your thoughts on coming back to the office?
Yeah, once everything's safe and people can be secure and comfortable, we're going to bring people back to the office. And so we'll figure out whether that's March, April, May, June, July, August. I don't even know when. It doesn't really matter. But our company, our secret sauce, our family atmosphere is much better when people are here together, working together, handling our clients, doing the right things, coming up with new ideas. It's more fun. I wouldn't run the company if I had to have everyone working remote. I just wouldn't want to do this. It's not that much fun. We're bringing people back and they're going to come back and they're going to love it. And we actually have to tell people they're not allowed to come in. We have people that want to come in. They say, isn't it optional? They say, listen, with the governor and all the things going on in Michigan, let's just be overly safe, stay home, keep the only people that have to be here. We've done all the right things by people, but we're bringing people back when the world's over, when the world's back to normal, March, April, May, June, July, who knows? We'll figure it out. And I think, are we going to force people to do a vaccination? Absolutely not. I don't think we're even legally allowed to do that. However, the key for me is that people that want a vaccine and are scared, get the vaccine. As long as it's readily available from whether it's my parents or your parents or my uncle or my buddy who's immune to is anyone that needs a vaccine or needs to be is uncomfortable, as long as they have access to it, then I feel great about the world going back to normal. Not that everyone has to take the vaccine if they don't want to. I can't.
Yeah, there's a population of people that are anti-vaxxers. I'm not going to get into that, but once the vaccine comes out, the rest of the world's going to be fuck off. We're all going back to work. If you want the vaccine, you can take it. If you don't, right? I mean, that's basically the long and short of it. So
I think that business-wise, we've kind of seen which sectors are really affected by this, right? And everyone's been able, the recent shutdowns that we're having, everyone's still able to work, right?
Not everybody.
Not everybody. not everyone, but you know what I mean? Like, it's not like all of a sudden, like we had to freeze everything and rates skyrocketed and everything like that because everyone was afraid of, people getting laid off during a loan process, right? I mean, I'm sure that these recent shutdowns and the recent spikes, have you been thinking in the back of your head, like, oh, here we go again? Or are you more like adapted to the new norm?
No, exactly, Sally. We've adapted. I think that's the difference. Is like the COVID was a sucker punch. It punched everyone. No one knew what to expect. Everyone's working from home. Not only our company, but everyone. A lot of people lost jobs. 7 million people lost a job in a week, or 6.8, whatever that biggest week was. Like, that's scary stuff. And you didn't know when it was going to slow down or stop. Now we can manage through this. People know if they shut down the bars or restaurants, how do you manage through it? How do you make sure people are more prepared? And so we've adapted to it, and it's working great. And and I think my perspective is, of course, we want everyone back in the office and be all the bars, restaurants open, but nothing like what you saw before is going to happen because everyone's adapted to it. And I think that it's less affecting less people now than it was before. And I'm optimistic there's a light at the end of the tunnel, and that we're going to be back to normal, the world. And I can go to a basketball game with my kids here, and hopefully January, February, March, April, sometime soon.
Yeah, it'd be really nice. I mean, look, the first time around, it was crazy, right? I mean, we, like you said, it was a kick to the nuts. It was like, oh my God, what just happened? And nobody wanted to touch a mortgage. And then what happened through COVID, and like right now, the reason I think it's different is everybody adapted, and people have an appetite to buy houses. We didn't know what was going to happen, and people that lost their jobs, unfortunately, in the service sector, aren't always the ones buying homes. The reality is, right, the server at the Chili's isn't normally buying a house, unfortunately. That's just the reality of it. Not all of them, but it happens, right? So anyways,
I think a major, hold up to like a bottleneck per se of, how things are going to look going forward was the election as well, right? And it's like, it was talked about so much where you couldn't do anything without, seeing something about it or hearing something about it. And now that it's over, I feel like everyone just was like, all right, that's behind us. It's time to move
society's
forward.
Ready to move on. Wouldn't you agree, Matt? Like, society's our country is built on workers, and we're like ready to go.
Yeah, absolutely. And I'm excited, and everyone stay safe in the meantime. And then we're going to get rolling, and everyone's gonna be happy, and we'll get this world back to normal like we all like.
Yeah, no shit, right? Matt, is your middle name Randall?
Yeah, it is. Don't tell anyone.
Sorry, dude. I couldn't help it. I had to do it. I Googled you, right? And Google told me it was Randall. So the world knows. I mean, just if they want to.
Yeah, my parents, they didn't do great with the naming thing. Matt with one T, Randall in the middle.
Yeah, dude. You're all fucked up. Yeah, right. Except Ishbia. Ish is the best way to go. Ish.
Yeah, I'm good with Ishbia. Yeah.
Yeah, Matt. Let's talk about your team there, right? You guys are big. You got a lot of people there. Big team, right? You guys built that other. Is the bridge done?
Yeah, the bridge is done. You walk back and forth now. We got moving walkways. It's awesome. It's really cool.
That's amazing. So, at what point do you have enough people to you know what I mean? Like, how, like, do you feel like you still need more? Like, you've always done a really good job of being overstaffed because you never wanted to be. I remember one time, a long time ago, we kind of got caught with our pants down. I was an AE, and we got hammered with a bunch of deals, and tour times did slow down, and you were like, that's never happening again. It never has, really. So talk to me about that. Are you going to continue that road, or do you feel like you've got the right size now?
No, we got about 7,500 people here. We got a 1.5 million square feet here at the company with the bridge connecting the two buildings. And we're going to keep hiring. We're going to keep hiring because you know what? We're never going to be behind where we need to be. We believe the demand for mortgage brokers and for you guys is going to only go up in 2021. And so we have, I think there's 300 underwriters that literally are in a class right now that graduate in a week. And then there's another, 60 every other week. And we're going to get another 500. We're going to keep growing and building it because you know what? The way is not just underwriting, it's technology investments and it's sales team and it's compliance and risk, all the teams. You have to build it all up. And the way we think about it is we're going to have our best year in company history next year. We just beat last year by a lot. This year, 2020 was our best of all time. 2021 is going to be much bigger, and we have to serve our clients. And mortgage brokers are going to grow because as soon as consumers understand that it's cheaper, faster, and easier to go through a mortgage broker, they're going to start doing it. It's going to happen. And when that happens, we're going to grow, you're going to grow, we're all going to take care of, and consumers are going to get better deals. They're going to instead of, the average interest rate at UWM last month was like 2.76. And now that depends on FICO, but 2.76, the industry was like 2.9 something. So we're like, mortgage brokers are lower rates. They offer lower rates, with better fees, better all-around deal at mortgage brokers. And when consumers know it, we're going to grow. And so I'm preparing. I'm building up the war chest of people and team members and technology to make 2021 a banner year.
Yeah, that's awesome, dude. So you mentioned it, right? Brokers are better in your opinion, and a lot of people's opinion. But why, right? Like, why can't a retail company be as good as a broker? Or why is a broker more efficient for a consumer? It's really about the consumer, like you said, right? What's best for the consumer? And so why is it that a broker is better for the consumer? You know what I mean? Like what is it about the broker that makes it better?
It's so funny. So first off, people think, oh, broker, it's a middleman, so it's more expensive to go through a broker. Like they're just not in mortgages. Let me tell you really clearly, and then you guys know because you're in the business. But the reality is this: when you're a broker, you're working with a consumer that works with a broker, they have access to all the biggest lenders who are competing for their loan. So if you went to Omega, you have access to Omega's going to have access to us, and we'll use Flagstar and Quicken since they're all three Metro Detroit, just using three.
Yeah.
And you know what Flagstar and Quicken and UWM all do? We have to give them a really good rate, or Paul and them are like, or Sal, like, we can't send it to them. It's not competitive enough. And we also have to give them great service. He's like, oh, well, you give me a great rate, but it's taking 90 days to close it. Like, you can hold us accountable. So there's an accountability level in the wholesale channel that's just not in the retail channel. I had a friend of mine who called me this last weekend, just yesterday, actually, Sunday, and he said, hey, I got a quote from Wells Fargo. They said it's going to take and I'm like, and he's like, it sounds like, I'm not going to go through the details, but anyways, he's not going to Wells Fargo. He didn't understand. And it's like, he's going to take 70 days, 80 days, 9 days to close a loan. And it's a rate that's a 0.5 higher. Like, it's just completely nuts. And so, but to credit all these big retail lenders that put commercials on every other minute, like, that's what they try to get people to think, is you go through them and you get a better deal. And it's just not the truth. You get a lower rate and lower fees by going through broker. And that's after the broker is paid, including the broker fees. And if you look at public documents of, margins and all the things, like, it's always cheaper. And I hate to say always, but it's always cheaper to go through a broker than it is to go through a retail lender. It just always is. Yeah.
Speaking of margins, I was reading an article that lender margins have gone up through COVID and after COVID. Is that what you've seen at UWM? And have you guys padded the margins, or are you guys like sticking to the same margin and saying, we're going to keep the same? Or are you like, listen, we have there's some turbulence. Let's increase the margins so we can make more money for our coffers. I mean, talk to me about that.
Yeah, margins for all lenders are up across the board.
Yeah,
right? The difference between the primary and secondary rates are substantial right now. It's a moment in time. It's not going to be at these levels. Like, it's going to get back to more normalized, and we projected our 2020 to be more normalized. Our 2021 to be more normalized. It might take a little longer. It looks like margins are going to be a little bit bigger. But the reality is it's a supply and demand, operational capacity for all different lenders. And quite honestly, people are working from home. It's just not as efficient right now through the mortgage process. So people are not able to do things the way they'd like to do them. Our margins are bigger than I would like currently. But at the same time, we still believe that they're going to be higher than traditional normals in the past. And so we feel good about everything. I don't think margins are a concern. I think the reality is, as rates are really low, like the 30-year fix is 2.625, 2.75, 2.7. Like, if your 30-year fixed rate has a 2 in front of it, sign me up. I'm in. Yeah. And if as long as that's going on, I don't care if margins are 1,000 basis points or 4 basis points, 30-year fixed in the 2s is the deal.
Yeah, all day, dude. I totally agree with that. Fannie, Freddie, probably not coming out of conservatorship, right? They're just so everybody understands, in layman's terms, Fannie and Freddie basically went under government control through the crash, have not come out since. They make oodles of money, Matt. I mean, they make trillions of trillions. I mean, they make so much fucking money, and the government's like, we're going to keep it for like as long as possible. Trump was really pushing to get him out because he was, privatized, get him out. You don't see that happening now, is what you said in your 3 points video. Is that how does that affect anything? Why isn't it coming? Why aren't they going back to being private? I mean, why aren't they letting it become private? Is it the cash?
Well, let's just think through it. So here's how I think about it is, we saw what happened in the 2008 crash, but that was a long time ago. So let's just talk about March 2020, okay? With COVID. Sucker punch. Never knew what was going to expect. What happened? Jumbos dried up. Non-QM's gone forever, right? I guess they're coming back now. But these loans, and that's because private investors said, wait a minute, I'm not so sure how this is going to shake out. I'll take a pause. Well, Fannie and Freddie, if they would have done that, the whole economy would have crumbled. And that's the reality. Yeah. And so Fannie and Freddie have to That's why though Collaborating, these guys were trying to do, Mark Collaborate, and the President Trump's concept was, let's get them so much capital that they can never get hurt. And that's what the capital rules and stuff, and that they can go back to being private. But the reality is private businesses, they slow down things. And if the government's not backing it in the housing controls the economy. Like the economy, if the housing crashes, the whole economy crashes. And so you can't have private companies controlling that potentially. And I think that's what happened back in 2008. I don't see it happening, to be honest with you. I know that Charles trying, but it's just not going to happen.
You think it's a safer play from a liquidity stance, from a capital stance? You think overall, being government controlled, they're going to have more access to that? Is that what you're thinking?
Yeah, I think they are, and I think there's a lot of upside to it. I think it just depends on, like, it was government controlled. It just depends on how the government controls it, right? And it depends on the president and the FHFA director, and there's a lot of nuance there. But the reality is this: the best thing for consumers is that the government and everybody cares about housing extremely, and it affects everyone, and so they take care of it, make sure it's safe. So when what just happened with the markets, they lowered rates to help people can save money, people can buy houses a little cheaper. They help make a difference, and so I think it's good how it is. We'll see how it shakes out, but I don't think it's changing. What
happens with regulation in the new presidency, you think?
I think it helps brokers and consumers. I think, the pay-to-play games that people play, I know not everyone's a huge fan of what Richard Cordray and the CFPB did, but the reality is the things like MSAs, back 6-7 years ago, MSAs, which are marketing service agreements, where mortgage companies could pay real estate companies, hey, I'll pay you this amount of money, and then you get leads. Like that's a gray area. It was basically ruled out, and now they're allowing it to happen a little bit again with a new president and with a little bit stricter regulation. What happens is it doesn't happen anymore. It doesn't happen at that same level, or maybe it tightens down and people are a little more concerned. So then what happens? Consumers get a better deal. What does a consumer getting a better deal mean? They probably end up at a broker shop. And so my perspective is more regulation helps consumers. And if it helps consumers, it helps brokers. And if it helps brokers, it helps UWM. And so we feel good about that whole process because we're on the good side of it, the do right by consumers, not the pay to play side.
Yeah, for sure, dude. And you guys have done a lot of good on the technology side. Oh, hold on. Let's see here. Rama says, your advice points to be taken care of to mortgage brokers and loan officers to plan. Cool. I don't know exactly what that means. Do you? To plan a successful... Yeah, we have to take. Yeah, we got. Go ahead, Matt. If you know how to answer that, go ahead.
I'm trying to. So I guess my perspective, my advice for brokers to win long term is what we started talking about is like purchase. Right now in a refi market, everyone's focused on refis, and of course, do all the refis you can, but make sure right now is a huge opportunity. Go talk to real estate agents because you know what, real estate agents, they hate that it takes 60 days to close. So go show them you can do it in 30 days. Build your purchase relationships now for the long-term success. That's the game right now. And so the biggest thing right now is do the refis when they come in, but go get the purchases. Go build the relationship so that you have continual business. So when rates go from 2.5 to 3.5, you're not going to have that many refis left. Make sure you have that consistent purchase business. And at the same time, go all in on technology, whether it's partnering with a lender like UWM or other people that have access to this technology. Because once you're in on technology, you become almost invincible. When rates go up, you do less loans. You're still going to make your rent because you're going to be able to take care of things, and you have a purchase consistent business coming in along with not huge fixed costs.
Yeah. When you talk about technology, the reality of the mortgage industry, as sophisticated as it seems sometimes, and as much money as comes through here, like trillions and trillions of dollars, when you compare this industry to, like, let's say stocks, bonds, and securities, right? We are well underperforming from a technology side, in my opinion, right? We have forever, because we have dinosaurs in our industry that think that I've been doing this 30 years and I'm going to take this piece of paper and run it. It's like people are harder to change in our industry, it seems like. But for a company like us that want really high level technology, we have a hard time finding, like, for instance, an LOS, a proper LOS in our business that is good, easy to use, is either very, very expensive and so out of reach, or sometimes they all suck, dude.
They all suck.
A lot of, and I know you guys have your system, but for a company like us who's correspondent, it's a little bit more nuanced and trying to find something that can fit that. But as far as technology, Matt, why does everybody fucking suck so bad?
Well, so the reality is this. You're only going to win with technology. That's why we're winning at UWM. I got 1,000 technology. We build cool stuff to make it easier for you guys, make it easier for consumers, make it easier for my team members. And like you said, LOSs, Brad, is, I'm like, yeah, the reality is when you're building technology, just think about it. If I'm a technology provider, I build technology for 80 people. 80 different customers, maybe 300 customers, maybe 1,000 different customers. It can't be customized as at UWM, we build it for one, UWM, and we build it for one, our broker, our partners, right? Period. End of discussion. And so you have to invest in technology. The reason mortgage technology struggles is because there's two times in mortgage. Rates are going up and you're really slow and people struggle and they don't want to make investments in technology, or rates are down and people are so busy they don't have time to spend on technology.
Yes, which is so fucked up.
It's only one of those two. And what UWM does is we've consistently invested in technology year in, year out, good years, bad years, all different type of years. And what's happened is we have such a competitive advantage on it. And that's why I say as you guys build your business, continue to invest in technology in the good times and the bad times. Continue to invest in your business is the other way of thinking about it. And so the way we think is whether it's using our technology, other technology, but when you use someone's technology that's a vendor, they're running their own business. And it's really hard for vendors to really provide the technology needed in such a complicated, complex business like mortgage and so consumer centric.
How much for ease for me can we buy ease off you, bro? Let us have ease, bro.
Can we license it from you?
Come on, bro.
Yeah, no, that's the benefit. It's the proprietary technology. We've been building it for so long. It's such a competitive advantage. My competitors that we deal with, and I mean, you guys know some of these guys. The difference between our tech and their tech is such a wide gap right now, and it makes it so we can underwrite loans faster. We can deliver things, making things easier, and then same thing with making things cheaper. But at the same time, at the end is making it so that everyone can have a great experience, so that Omega's clients have a great experience. You have a great experience. We make it so it's, and then everyone just grows and it perpetuates upon itself. So technology is a differentiator.
Just so the audience understands, an LOS is a loan originating system. That's where all the data goes in. You run through Fannie Mae. That's the system that mortgage companies use to basically originate business. And Matt built the best one in the industry and kept it for himself. You asshole. So, no, it's really good. It's a really good system, and I totally understand. I mean, it is very well done. So real quick, I wanted to ask you a question about the past, right? So when I met Mat Ishbia, I started working at Shore Mortgage, which was the retail side. Matt was in Farmer Jack, and we were in literally, it's like an old Denny's. It was a Baker Square, and these were the buildings. We had it was like a campus. We had that. We had the other one, and so it's interesting that wasn't that long ago, dude. You know what I mean? It wasn't that long ago that when me and you sat down. And I was like, man, we need a pricing agent. You're like, that's not in the cards right now. And I'm like, it's a pricing agent, right? I remember that. Like, but now it's so far past that. You were so focused. So can I ask you something, Matt? What back then can you attribute today's success to? Looking back at what you did back then.
You know, the biggest thing that we did back then, and credit to you guys and a lot of people that were there with us at the time, was we stayed so in the weeds of the business and so singular focused on a great experience. So I was always focused on the great partner, broker experience, correspondent, their experience for them. And so when you focus on the experience of your consumer, you're going to win. And so my consumer is mortgage people, right? Your consumer is consumers. And so that... Yeah, and agents, exactly. So you make sure that you take care of your agents and consumers. If you're delivering excellence for them, you're going to win. And so that's what we've done. And I mean, we were talking 6 years ago, right? 7 years ago, 8 years ago, when we're talking about we're in those little buildings. We had 400 people here, and we were big back then. But the reality is now being focus on excellence for the end user, whoever your end user is. We focus on the brokers. We focus on consumers through you guys and real estate agents. You guys focus on realtors and consumers. It's a big deal. And that being in the weeds of your business and making the right changes, like you said about the pricing unit, at that time, that wasn't the priority. We had to focus on, there's 91 other things that we weren't very good at. And that was number 92. We got there. And now we have another 1,000 we've built since then to make it great.
Yeah, it's crazy because when we were there, Matt, and when we scaled back retail and went over to the AE side and I learned the wholesale business, the whole thing back then was like we were like number 4, number 5, and you're like, we want to be number 1. We want to be number 1, right? And you get to number 1, and then it's like, now what? So Matt, now what? Right?
Yeah, so this is our 6th consecutive year of being number 1. We're number 1 by a lot. And so it would always be number 1 and then number 1 by more and then grow. And now we're looking and saying, gosh, brokers are only 20% of the market. Right? We want to be the number 1 overall. Right now, then we're number 2 overall, and that's because places like Quick and Rocket, they actually play in the whole 100%. They play retail and wholesale. We're going to go take that down next, and we're going to be the number 1 overall lender. But the reality is that's not as exciting to me as the broker channel, the growth, because I know if I educate consumers and I help you guys win, you're going to go from 20% of the market to 30 to 40%. And then we're going to easily be number one. That's not going to even be a question. And so my real focus is help you guys grow, help educate consumers. That's part of going public. Is I'm on Yahoo Finance last week. I'm on CNBC last week. I'm on these things more and more. And the more I can educate consumers to go to get a mortgage to findamortgagebroker.com, find a company like Omega to get your loan. It'll be cheaper, faster, easier. As more we educate people like that, and we're going to all win. And that's really the game. So that's next. That's the big thing, is like, how do we take that down? And we're going to do it together.
I know that you did that Super Bowl commercial, and it did cause some buzz, right? Back then, caused some calls. You guys were getting calls, and you guys were like handing them off. Do you see you guys doing more marketing in that space? Do you see yourselves helping little brokers market for them? Because marketing ultimately in our space is very sparse. Good marketing, at least. Some people do it really well, but most people don't have the time. They're making too much money to spend time on marketing. They don't have the expertise. So in your opinion, how do mortgage brokers get their message out on a hyper local level, if that makes sense?
Yeah, so it's so important to market, right? As we can see, like, that's why 80% of the business goes through the retail channel, because those guys market, they spend the marketing dollars. And so we're going to help. We built Brand 360. We built some technology. I think social media is a great way. I know you guys at Omega are fantastic, but the way you market yourself out there, one of the biggest ways that people forget is good old fashioned, do a heck of a job. You do a heck of a job on your every client, it grows. And then we see it all the time. Every client should turn into 2 more clients if you do a heck of a job. Mm-hmm. And that's how we think about it, is help our brokers do a heck of a job every single time. And their client closes in 19 days at a 2.74% interest rate. He or she knows 1 or 2 other people that would love that, because everyone needs to get 30-year fixed in the 2s. And so doing a heck of a job is a big part of it, but we're going to help supplement. We're definitely doing things, driving people to findamortgagebroker.com. Thousands and thousands of people go there, and they're going to go out to mortgage brokers. We're going to help get them to the right people, that loan officers that actually do a heck of a job for them. And so we're really big on that. Is you got to market, we got to market, and we got some things. Whether it's probably not a Super Bowl commercial, but we got some cool stuff that's going to help drive more people to consumers, more consumers to you guys, to get them a great deal.
Awesome, Matt.
So no Super Bowl commercial this year?
What's that?
So no Super Bowl commercial this year?
No, we don't think we're going to do a Super Bowl commercial this year, but it was kind of a one fun thing. But we'll, I'm open to it. If you come up with a good idea, Brad, call me, email me. I'll come up with one. If you have a good idea, maybe
you're going to have Brad on there like riding a horse or some shit. Forget that.
Yeah, if you got a good idea, we just want to use the money the most efficient way. And if we decide to do a Super Bowl commercial, we will. It's a little late now, but we're always looking at things. But anything you can do to come up with something to help drive consumers to the mortgage brokers, educate consumers, we're in on it. Whether it's Super Bowl commercial, whether it's social media, whatever it may be, and we're open to all things going forward.
Awesome. We're gonna get to 3 questions real quick. Brad, Sal, anything else you wanna say? No, you guys good? All right. You guys have a question with three questions, or you want me to handle them all? I'll start. How about that? Matt, going back to your basketball career, what about that experience shaped who you are today?
Oh, almost everything, from the way I look at it, from my basketball experience from when I was in high school into college, was just like, outworking everybody. I had to be the hardest working guy in the Michigan State basketball team to be the worst player on that team, right? Like, I was not that good. I just had to outwork it. I had to get in a little bit early, stay a little late. I had to work out even harder. And so work ethic drives success. And so everything about that basketball experience, and then we're playing for Izzo and learning from him about the accountability of getting the best out of everybody. He was so good at making Mat Ishbia be the best Mat Ishbia I could be. He didn't try to make me Mateen Cleaves or Jason Richmond. I had to be the best Mat Ishbia. And so we try to do that here at UWM. Help everyone. I want to help Omega be the best Omega they can be. You guys be the best you can be. And if I can help get everyone to be the best they can do, all my marketing people, my underwriters, my sales people, be the best version of themselves. And so I actually did write a book. I said I could write a book, but I did write a book about this. Actually, all the things I learned from Michigan State basketball, how I apply it to business. And so I could talk for hours and hours upon it. Those are just a couple quick ones.
That's awesome. Next question. Who in our industry do you look at and say that guy's smart, or they know what they're doing, or I like what's going on over here? Who's impressing you in our market right now?
What's interesting is the people that impress me the most are the people that none of us know. When I'm really trying, so I see whether it's on social media, I see loan officer I've never even heard of. I don't even know if he's in a retail broker shop. And I see his marketing, and it is consistently coming out with things. And so I'm impressed by people's hustle. people's hustle impresses me. So not necessarily, some executive that wants to go on TV and talk about things like that doesn't impress me. What impresses me are people that are hustling and are reaching the business that are consistent. It's very easy to try to like market yourself for 3 months or 6 months or when things are good. It's really hard to be great every day and do it for the long term. And that's what impresses me. So a lot of no name in your perspective, other people are the people that impress me the most. People that are in the weeds. They post every time they get a fast approval. They post every time they get a positive consumer. They get a Google review. They do all the little things. That impresses me because that's excellence. That's attention to detail and excellence. And that's what impresses me the most.
I'm really happy you brought that up because anything you do in life starts out as being fun and exciting, and it always ends up it's going to be work at some point. Regardless, porn stars, it becomes work. Whatever it is, it's going to be work. You know what I mean? So, guys, by the way, Brian View said go green.
I love it. Go white. I love it.
If you could be a fly on the wall for any historic event that you could think of, which one would it be?
That's a good one.
Ooh, that's good. Historic event.
Could be a sports game. It could be, a war room and,
the signing of the Declaration. Yeah.
This is probably not answering the question that great, but you kind of throw me off a little bit with the question, but I love it. I love seeing the best in the world at what they do. So like things that really excite me would like being in a room where like watching Tiger Woods prepare for a golf match 10 years ago would have been really cool. Or even seeing like a Michael Jordan and seeing how he's preparing, or like Michael Jackson, who's the best entertainer, like seeing how excellence and how like these people are the best in the world at what they do and how in detail they are, how focused they are. They didn't just get there for being lucky. They just didn't get there like, I want to be the best basketball player of all time. Like you actually had to do all the work. And so I'd love to be a fly on the wall and seeing people prepare for a game or prepare for a concert, prepare for something like that. That'd been pretty cool for me.
Isn't it funny when people say, "Oh, that guy's lucky. Oh, that guy's dad did this," or "Oh, that guy." People kind of want to shit on people's accomplishments, like they didn't do them. It doesn't matter what it is, whether even if you got a head start or you got a little bit of a bump or you had some help. You probably utilize that help to get you to where you're at. It doesn't matter what options it does take consistent effort and a lot of work to be successful at anything. So I think that's very, very true. And I think the people that look at other people with envy and are like, oh, like someone could look at you, Matt, and be like, Matt, oh yeah, you had it all figured out. But you took what you had and you made it what it is today. And that wasn't easy. Right. And there should be some accountability for that action. Right.
Yeah, and that's okay. Michael Jordan was great because he was 6'9" and I was only 5'9". If I was 6'9", I could have been Michael Jordan. Like, you know what? That's not what happened, right? So that's not what happened. And so the reality is, people get advantages, and there's people that have nothing. Like I always talk about Kim Kardashian. They say about Kim Kardashian, oh, she makes all this money. Oh, like there's a lot of attractive women that have a wealthy father out in LA that don't make $50 million a year. Right? Like she actually does the work. Don't think she just shows up and they just video her and she does like that's, I don't know. I don't watch those shows, but like whatever they do, like in order to be great, you have to work hard.
You got to work hard no matter what it is, man. That's it. Matt, dude, I can't thank you enough for doing the show. As always, I mean, you're always so gracious. You don't have to do our show and you do. And I appreciate it. Thank you so much for doing it. Anything you want to tell the audience that we didn't hit on about what Matt's going to do in 2021?
No, well, first off, I love being on the show. So invite me back. It's always fun. You guys do a great job. You guys are some of the best in Metro Detroit, if not the whole state of Michigan, and what you guys do. So keep up the great work. And all I'll tell you is this, anyone that's watching is, the mortgage market in 2021 is going to be better than 2020. We're going to do more business. Omega's going to do more business. We're going to grow. There's a big opportunity out there for everyone to succeed. More consumers are going to be able to save money on a mortgage. More consumers are going to be able to buy houses affordably. More realtors are going to be able to grow their business, all tied to 2020. It's going to be a great year. I'm excited about it.
Absolutely. Last question. Doesn't Brad look like he's wearing a toupee?
I think he looks good. My guy, he looks good. Him and Sal and you guys are doing good things.
All right, man. Matt, thank you so much, dude. Have a wonderful day. Kick ass, and we'll talk to you next time, dude.
Thanks, guys.
All right, man. Bye-bye.
Thank you.
Man, that guy, love him or hate him, he's done a lot of crazy shit. You know what I mean? Like he's worth billions of dollars, dude. In like 10 years.
Yeah, but I think the only reason you could hate him is because you're not doing your job. If you're a competitor, how else do you hate him? I mean, as a broker, right, there'd be no possible way we would be doing what we're doing right now without.
Nobody would, dude.
UWM and the technology and their thoughts and, working there, right? So I didn't even know what the fuck a broker shop was. before I worked there.
No, neither did I. Didn't know what wholesale was, dude. I
didn't know what a mortgage was before I worked there. I got
Yeah.
hired in on the retail side. I didn't know what a mortgage was.
I hired you, I think, didn't I?
No, you didn't.
Who hired you?
Chuck Nance.
Oh, that makes sense.
Yeah. But yeah, I think I think on a lot of people's minds, especially like end of summer, I'm like, dude, how can this can't continue, right? Like rates are going to go up, and like we're going to be starving in the winter. Like in the back of my head, there was that thought, right?
Fear,
and,
fear, for
right.
sure.
We're busier than ever, and I mean, I can't really see things necessarily slowing down. And again, times like these where everyone's refinancing, everyone's doing this, just makes everyone who's not set up for it look worse. Like banks, right?
Oh yeah,
so it's
like, the volume, right?
I think that people are being driven to our channel, aside from marketing right now, right? Like just word of mouth. Like, dude, you can't use Bank of America. Like, there's no way that they're going to allow us to close in 60 days. We got to close in 30. You need to use a broker,
Mm-hmm.
And then they talk to us, and they end up getting the same deal or better, So
right.
It's a good time, I feel like, to continue to push that shift away from retail to the broker channel, like he was saying. I mean, you can perform leagues ahead of the retail channel. I mean, they just are too busy. If they have 80% of the market, right, and they haven't hired like the broker channel has, right?
Right.
I mean, they just can't handle it. I sent all my stuff over for a pre-approval a week and a half ago. How long does it take with you? I'm like 30 minutes, and it's like, it's crazy. The difference, like the arbitrage, right? In our business.
Yeah, no, it's real, dude. And you know what's weird? Like, yeah, even if the markets get smaller, Sal, because our segment's going to grow market share, we should be all right. Rates are going to be low for a little bit, and I do think the purchase market's going to be hot.
You do the right things, like your piece of pie doesn't get any smaller, right? Overall, pie might get smaller, but you can still eat.
Oh, as long as you're increasing your piece of pie, right? If you're doing all the right things, you should increase your piece of pie. Unless you own like 50% of the market, dips and things really, as long as you're growing, you should at least stay static, right? So no, man, it was I like Matt. I like what he's doing, dude. He's got tons of money now to do a lot of other things. I'm going to be interested to see what he comes, because this guy's like, he's in the lab. Like, I've always wanted to do. He probably has a list of things he's always wanted to do. And now
100%,
right? And yeah, other than getting scrubbed by the royal harem, he probably has a list of things that he's wanted to do, and now he has a chance to do it, and he's probably going to do some cool shit. And his technology is probably not going to get worse, right? I'm curious to see how things change as far as him and his company, and with the extra capital. Does pricing get better? Do we get better technology? It'll be interesting. It'll be really interesting. I mean, if I was him, I'd quit. I'm worth $11 billion, bro. See ya. You know what I mean? At what point is money enough? I wouldn't be doing my fucking podcast or our podcast with $11 billion in my pocket. But good for him, man. He's a salt of the earth guy, and he's always treated us well. You know what I mean? Which is cool. So, anything you guys have before we go?
That's it.
Brad, what are you gonna do about your hair? Honestly, like it's a problem.
I'm gonna get it cut.
Where?
Actually, no. Fuck you. It's not a problem. I'm gonna let it go just because you don't like it.
It's not just me, bud.
I don't think he has bad hair. At least
it's not bad hair.
It's just long as. Oh, your hair has been making a transition over the past couple of years.
Yeah,
you got it real short.
Yeah, you know what it is, bro. When you get older, you
got that Drake cut.
Yeah, bro. Give me that Drake. All right, guys. Well, next week is our last. Next week's our last episode of the year. We've got Mr. Barry Habib on. Really good guest. Always has a lot of knowledge. Another great guest, and he's going to probably give us a real good roundup for 2020, and we'll talk about 2021. Everybody's predictions are 2021 from a real estate standpoint. It's going to be really good. You never know, but it just what are you smiling at, bro?
John Hill's comment.
What do you say? Wait, put up John Hill. Coming from the guy who had a dead caterpillar on it, you're good, Brad. John Hill, Jesus Christ. John
Take that
Hill.
with a grain of salt. It's not.
John Hill, coming from the shiniest man in the business, we'll take that as a good one.
Oh my God!
All right. I love
Barry
you.
Habib next week.
Barry Habib next week. Guys, everybody go to irepodcast.com or your podcast app, like, share, subscribe, please. If you like this show, share it with someone. I'm sure they'll enjoy listening to Matt, right? So love you guys. See you guys next week. And then after that, we're going to take a little hiatus and we'll be back in January. Peace out. Bye.
See you guys. Bye-bye.